Stefan, if you can just start by giving us an idea of the background of Veragold, obviously privately held company operating in Panama, some information around the flagship asset essentially, and a bit of the history for a start.
Sure, I can do that. Like you said, Veragold is a privately owned company. It's owned by 4 family offices. The main shareholder is an American heart surgeon, and he bought that property together with his partners 11 years ago after the former operator left the mine site. The reason why they bought the property originally wasn't that they necessarily want to become miners. They knew that the former operator left behind a stockpile that contained roughly 120,000 ounces of gold. So the first idea was wealth protection. They want to get their hand on the physical gold. But actually 10 years, 11 years before, the gold price hasn't been as attractive as today. So what they did, they just drilled and they learned about the last 10 years through drilling programs and whatever, that there's not only that 122,000 ounces of gold, that there's a total of roughly 1.2 million ounces of gold and 5 million ounces of silver. And then it made sense at some point to put the mine back into production. We put a team together from you need that obviously because none of them was miners. We put a very strong team together in Veragold Mining Company. We got Don Foote is our CEO. I think in the mining business he is well known. And now is the time to get the mine back into production. Actually, the main asset we have is, or the first project I like to say is Mina Santa Rosa, where we inherited that stockpile. But the concession, or I say it's not a normal concession, the contract law we're having in Panama is pretty unique. From that circle where our concession with Mina Santa Rosa is, we got a 50-kilometer radius, and we know for a fact that there are at least 6 more brownfield restarts. It went through the National Assembly of Panama unanimously, and effectively gives us the rights on all minerals and exploitation and in that 50-kilometer radius. So might be a pretty big project in the future.
But the focus for now is
the main project, which is Mina Santa Rosa in Panama.
And sorry, up to 1.2 million ounces of gold, 5 million ounces of silver. You've got a current program ongoing at the moment. When is that winding up, and what's the expectation for an updated resource, if you can talk about that?
Right now we're drilling because the mine has produced gold till 99, and obviously the pits have been full with water. We dewatered the pits and we started the drilling program because the former operator never got to the ground of the resource, of the reserve. And the drilling program we're doing right now just drills out how deep the resource is going. We got first drill course from 150 meters below the former bottom of the pit. They are still in mineralization. We got Rich here as a specialist. He says it's a good sign, but we don't know where we will end up.
So your pit's 63 meters deep. They're still in mineralization, 150 meters below that. And the idea, so the 1.2 million ounces is the old 2016 43-101. That is currently being updated and is due out soon. And you know, the old 43-101 was mainly in the measured and indicated resource category. Obviously, with the increased drilling, the more concentrated drilling, we are recategorizing the original 1.2. We have found more as well. That 43-101 hasn't been published yet, so we can't say what the new numbers will be. But you can quite clearly imagine, obviously, the stockpile they have, which we'll get onto when we talk about the bond, that is in the proven reserve category. It's already been crushed, it's on surface. And then it's the recategorization, all the other resources as you go deeper and wider.
So you mentioned the bond, and that is something that that I'm particularly interested in, and probably don't understand as much about that as I need to. But before we get to that, it is important to understand exactly what you're looking to do in the bigger picture. So you mentioned the 43-101. Is that just a resource statement, or are you republishing the feasibility of a restart?
It's the full mine plan, really.
Full mine plan.
It's got all the mine scheduling in it, the sequencing of the pits. There are 3 pits in and around the Santa Rosa area, which will be mined systematically alongside the stockpile, which is obviously there on surface, ready to go. So it's a fairly unique characteristic, actually, and that was the ability where we structured the financing around that.
And so just from basic numbers, what kind of annual production are we looking at? Is there a range or?
Yes, there's a range. When we reach full capacity, which would be roughly 6,500 tons per day mill, we'll have 80,000 ounces a year in production.
Okay, right.
That's the final step. We're ramping up the production. We're starting with 500 tons per day, then we're ramping up to 2,500, and the final full capacity plant will be 6,500 tons per day. And then we will produce roughly 80,000 ounces a year.
And production starts Q3 next year.
2020.
Okay, so to Q3 next year, what are the milestones there in terms of releasing study information, resource updates, etc.?
43101 should be out by the end of this year.
Right.
Obviously, we're running into Thanksgiving and Christmas in the States, but so Micon are doing the 43101 study. Bear have been appointed, and they're sort of overseeing the project. And as Stefan said, you know, you've got Don Foote, who's a metallurgist, ex-McClellan Labs. He's our CEO, and you know, it's a very simple mining project, truck and shovel. There's no cyanidation required. We're not heap leaching anything. It's a classic gravity flotation circuit, and it's important that your CEO, depending on if you've got a deep South African mine, you need a mining engineer as your CEO. This one is more about the chemistry set, getting that right, getting the flotation tanks all set correctly.
Right. Plus, there's one more thing I think it's necessary to mention. We don't have a tailings dump. There's no risk of a dam failure because we're using a process that is named paste thickening. So that paste, when that thickens out, like after 30 days, you can even drive on it. You can use it as building material. I think it was more expensive to treat the tailings. But it made more sense. That came from our beneficial owner who said he wants, in a perfect world, his idea is to produce green and clean gold. We all know that this is a theory, can never be totally green, but we are trying to do it very environmentally friendly.
Yeah, I think in this day and age as well. I mean, we've had the issues in Brazil, unfortunately, and and others. Tailings dams going pop quite regularly, and I think in this day and age, that extra expense for a paste thickening plant, it looks like a massive tube of toothpaste. I think it's one of the ways forward. I think we've all got to be aware of that. I know the environmental lobby are very keen to make sure that those things are adhered to, and it's part of your feasibility study and your clean-up. And as Stefan says, the beneficial owner wants to leave behind a better footprint than was there.
Absolutely, yes.
Okay. And then talking about that plan, funding the operation, including waste disposal, all costs money. So we're on to that bond. In my experience, I've seen the idea proposed several times, a corporate bond for a small company. It doesn't seem to get off the ground very often. Can you explain how much you want to raise, what it looks like, and why you're feeling confident about executing?
Okay. The idea to structure the financing in a debt structure with a bond was pretty easy because the owner said it's not the time to sell equity. We knew we can sell equity, but we said due to the fact that we know that we will increase the resources, we said let's push that out for 2 or 3 years, so we had to find a way how to finance it. We knew that the former operator left behind that stockpile that contained 122,000 ounces of gold. We said the only thing we're doing, we're monetizing that stockpile now. So the bond has some functionalities that are way different from a plain vanilla bond. We knew it can't be a plain vanilla bond because then we're right in a position that you just said will not come to fly. So our idea was to link it to the gold price.
Okay.
So that's what we did. We put a minimum interest rate of 5% into the bond. So that is like the guaranteed interest that will come in any case. And then comes a link to the gold price. When we issued that bond in March 2019, the gold price in euros was at 11.50. So consider that as the base price. And what we did, we said whatever amount is higher, the accumulated 5% interest or the increase of gold from a base price of 11.50 will be paid to the bondholder at maturity. Okay. If I see the gold price today, the bondholders are already in the money in the difference from gold price from 11.50 to 1330, 1340, where we are right now.
Very much.
So
So your investors are pretty much buying a gold forward.
Yeah, it is effectively it's a gold forward in a bond structure.
Okay.
So that is like the fiat redemption, what I just told you, that every bondholder has available in the terms and conditions. We thought about institutional investors a lot. How can we attract them? And we learned from the first meetings that everybody of these big institutional investors, they want to get their hand on physical gold.
Okay.
So we had to put that as another attachment to the bond.
Okay.
We thought about it a long time, how can we do that? Talked to the lawyers, and the lawyers said, well, you have to take that away from the original bond structure and do it in a side letter.
Okay.
Directly with the mining company, and that side letter says, give me back your debenture, and as soon as the mine is in production, Q3 2020, you will be delivered a physical ounce of gold for your debenture.
Okay.
But then we're not longer in a price of 11.50, because then the face value of the bond becomes valid. So institutional investors effectively just pay 1,000 euros per physical ounce of gold.
Okay.
So I think that's a unique thing in the bond.
So there's essentially, you've got the gold upside, you've got a coupon obviously that you're going to pay on a bond. Does that still make up for the risk in terms of mining? Obviously, I don't have to tell either of you mining is risky. A forward sale on gold, you're still taking on the risk of delivering that gold.
Yeah, I think what the issue here, project bonds have been tried before, where you've got let's say a copper porphyry, but it's all still in the ground. It hasn't been dug out yet. You've got to remember this. Veragold could have waited to produce the gold out of the stockpile, the 120, and pay for the upgrade of the plant from the 500 ton per day to 6,000 ton per day by cash flow. But what they've done is pretty much they've monetized 100,000 of the 122,000 ounces in the stockpile. So if you're using old project finance parlance, you've got a 22,000 ounce reserve tail. They haven't even taken into consideration the silver that's in there.
Okay.
So you're monetizing 100,000 ounces of this stockpile that's already been crushed. It was there ready to be heap leached, which is actually the incorrect way. You know, metallurgical testing has told us that actually a flotation and gravity circuit is the way forward.
Okay.
So it's there ready to go. So they've monetized it. You could have issued a convertible bond or a convertible debt, 12% or whatever, but actually what they've decided to do is discount the gold, make that available to both the retail and the institutional investors, and monetize the upgrade of the plant today rather than waiting 2 years for the cash flow or something.
Right, that was essentially the plan. And the only reason why we can do that, because that, like Rich said, it's already crushed, and it's just there, it's sitting there, and we know we have production cost per ounce of gold roughly at $350.
Why the impatience? If you've waited 10 or 11 years since buying the asset, why do we need to do it now? Why not do it from cash flow?
Because, like I mentioned in the beginning, we got more to discover. Actually, we filed for new concessions already with nearby mines.
Okay.
So that whole project will really grow. Santa Rosa is just a start. But with that start and with that bond, and the new concessions come in, I go there for a second. The next mine, the concession we filed for, is a gold mine where we knew from old drilling programs that it will be another 800,000 to 900,000 ounces of gold.
Okay.
And that mine is just like 9 kilometers away in a perfect world.
Sure.
We can get the ore from that new concession and process it in Santa Rosa already. So that's the reason why we want to accelerate that. The bond itself is, like I said, just an accelerator for getting the full capacity plant done.
Okay.
You've got a 17-year mine life at Santa Rosa as well, so it's worth getting it going quickly. And the current gold price, and they were keen to do this innovative finance as well.
Rich, obviously interested in understanding how Minexia fits in and the platform that you've created there. Why is this an appropriate deal to put on the platform for investors? And maybe just, if you can, just give the elevator description on what Minexia actually is and in that private market.
I've been assisting Stefan and the team on the structuring of this, and as you know, within our private market, which is the platform we've discussed before, and Minexia has created, allowing the retail base. Think of Airbnb, if you like. We are a provider. There are lots of projects out there. We are vetting these projects, and it's allowing that retail base to invest in mainly equity, but actually as we looked at this bond and we've structured that, there's a desire from Veragold's side not only to have the big institutional investors, but also have this retail base investing as well. The bond is listed in Frankfurt and Berlin, so it's trading. They've already got subscriptions for about 20 million of the 100 million they're going to issue, and we thought it was a suitable structure. It's an innovative financing, and the platform, as you know, is a disruptive way of financing some of these projects away from the typical broker model or the private placement model. And we thought it was an appropriate product to have on the platform that our investors, your average retail investor just wouldn't be able to get their hands on a private deal, and especially with a bond as well. So it's creating a lot of interest.
Okay. Yeah, I mean, there was the next question was going to be around, it's a great theory, and I imagine when you put it out to market in March where the gold price was compared to where it is now, I'd be assuming that you're seeing a lot of interest. Do people understand it, or are there hurdles?
It takes a while, especially when you take the physical option into it too. It is a product you have to talk about. But as soon as the people see, effectively, like Rich said, a forward, say, covered in the bond structure with a 5% minimum interest, I think that's the easiest way how to describe it. And we've been lucky that the gold price worked for us that good in the last 5-6 months, and I don't think we're there yet. But that's a discussion where will gold go in the future. We think till 2022, when the bond matures, the bond holders will have a pretty nice time with it.
Especially when you're producing out of the stockpile at $350 an ounce. I mean, the rest of the pit is around about the 725 level, which is still pretty good and an all-in sustaining cost. But you can monetize your profit ounces, if you like, out of this stockpile, and use that as that's why that's the unique characteristic of this project.
Stefan, why are we doing this in Germany? Obviously, is that the right market, or is that a parochial thing?
Why Germany? Yeah, well, a good question. We actually thought about when you want to do a mine financing, you're supposed to come to London because all the companies are sitting here. So there was one reason why we didn't come to London. That's simply called Brexit. Nobody knew what's going on. We had no idea where we would go with it. So then the next question was going to Switzerland or staying in the European Union. And due to the fact that I'm sitting in Germany, I got the connections there, I got the consultants there, I got the tax firms and law firms. We said, why not look into Germany? You can believe it was quite a hard way to go to compliance to that whole thing with a Panamanian mother company, which is owned by US Americans. We stuck in Germany just for the reason that we thought there's a lot to develop when it comes to mining investments in Germany and Europe in total. So, yeah, the reason why we're in Germany is just
I think there's a lot of untapped wealth out there.
Absolutely.
As well. I mean, you've got your traditional, you've got your traditional hubs of, Toronto, London, ASX, and what we found with the platform as well is there's huge amounts of Swiss, French, German people. They want to get involved in these sort of deals, but they don't necessarily have a London broker or a Toronto broker, etc. So this again is an innovative way, and it's tapping another huge market out there.
Absolutely. That's what we learned when we talked to the banks first. They said, well, we never saw a structure like this. They're not used to it. So we think that it's a big chance, actually, Germany and Europe in total, because gold investments, mining investments have a lot of room to develop in Europe, let me put it that way. In the UK, you're used to it.
Sure, okay. So while we're talking jurisdictions, it might be worth just giving people an outline of what it's like to operate in Panama, and maybe Rich, with your former risk assessment background, maybe you'd want to give us a bit of an idea of what developing a mining operation and then running a mining operation looks like in Panama. Where are the challenges? How do you mitigate those challenges?
Yeah, I mean, you've got to remember Panama is very, very closely linked to the US. It's dollar linked. The US has had a fairly close relationship with Panama for some time now. I didn't kick off too well to start with, but you look at the credit default swaps for Panama. It's 70 basis points over 5-year treasuries. whereas the UK credit default swap, I think, is 38.40 over
30-40,
gilts.
yeah.
So, you know, it's not as if you're looking at somewhere like Burkina Faso or, you know, Tanzania or somewhere like that. It's pretty stable. And this contratto lei, as Stefan was describing earlier, the contract law that they have is this 50-kilometre radius, and got voted through without any dissents from anyone in the parliament there. And that's important. And also the way they've gone about it in the last 10 years.
Okay.
Carefully, the CSR, corporate social responsibility nowadays, the environmental side of things, the pace thickening part, that is what the local and federal governments want to see. And they've been very, very careful to do that.
There's been a quote from the new Minister of Mining, and he says he sees Veragold as a raw model how mining should be. Why? Because we have in our minds what we do when the mine ends. We already have that program in place. The community, we donated land for the hospital, so everybody's happy. They're waiting for us to open the mine. I think that's the right way to do it. You have to keep in mind, you want to leave the place better than you when you came to it. That's what we're doing from the very beginning, and that's an important thing for Veragold, and especially for the owners of Veragold.
Okay.
That's how they see it. So Panama in total is a great environment if you do the things right. You have to stick with your plan. You have to do the things right. And like Rich said, politically, I think it's one of the most stable countries in Middle America.
Okay. And just going back to Mina Santa Rosa again, and the overall plan sits within that 50-kilometre radius.
It is right in the center.
And you've already done a certain amount of exploration work. What's the regional opportunity look like? And then where do you see yourselves in 3 years from now, assuming the bond gets away and the initial operations up and running? Where are you in a regional context in 3 years?
Well, we hope, and sounds bad if I say I know, but we hope, let me put it that way, we hope that in 3 years from now we will have more projects running, not only Mina Santa Rosa, which is the first one, and like I said before, we already filed for several more concessions in that 50-kilometre radius. And at some point, I think the time will be coming that we go public. Okay. If the resources are in a number that our owners like, we will go public, and we will need strategical bigger partners to cover that whole 50-kilometre radius, obviously. So in 3 years from now, I think it's the time when we possibly sit together again and talk about why is Veragold going public now.
Yeah, because in 3 years' time, you're going to have a totally unencumbered asset.
Yeah.
The bond will have matured. There's no other debt. There's no other lien. So the bondholders get a pledge of the shares of Veragold Mining Company, and they've got a first lien over the assets because there is no other debt. Okay. The only other is the family office ownership at the equity level. Right. And I think geologically, and this is getting a little bit crystal ball, putting my geologist hat back on, is I think you've got a very, very large porphyry system sat there because Romance, which is down to the southwest, we're starting to see a lot of copper in the system. And I think what we're looking at is these 6 or 7 brownfield sites they're going to develop, with Santa Rosa being right in the middle, I think is the epithermal cap to a much larger porphyry system. Right. Now that could be miles down. We don't drill that far yet. We're only 150 metres below the pit, so we're at 220 all up, 220 metres in terms of the drilling and continuing. Okay. So yeah, it looks along those lines. There's a big old system down there, and it's all within their contratto lei, and they have access to these 5 or 6 other brownfield projects they're going to restart.
Rich, Stefan, thank you very much for your time.
Thank you, Chris.
Thanks.